Let's go.
Hello, everyone, and welcome to Zephyr's Adjusted for Risk podcast from the shores of Lake Tahoe. That major shift in demographics and that much anticipated wealth transfer has opened up numerous opportunities for financial advisors. Some of those opportunities may not be as obvious as others. Well, I am very excited about today's show as it's going to be another fantastic episode as we have on a very special guest who's going to talk about some of these opportunities that financial advisors face. But first, today's episode is sponsored by the award-winning Zephyr, which helps investment professionals make more informed investment decisions on behalf of their clients. I would like to give a very warm welcome to Trevor Greenway. Trevor is the co-founder and CEO of InterVal. Trevor, thank you so much for coming on the show. It's such an honor to have you on. Can you please tell us a little bit more about yourself and InterVal?
Certainly. Well, first off, thank you so much for having me. I'm really excited to be here. Yeah, you guys produce some great content and keep the industry certainly well educated. So I'm excited about the conversation we're going to have today. As you said, my name is Trevor Greenway. I'm the co-founder and CEO of InterVal. InterVal is a Canadian first. We originated out of Canada, but we operate all across North America now. A software company that actually ensures that business owners and wealth advisors really have automated visibility to the health of private businesses. Really, that's where planning starts, both for business owners and their advisors. And it's our belief that when both those parties have constant feedback as to how a business is performing relative to their goals, it really allows them to take kind of more proactive steps to maximize the likelihood of wealth creation for the business, all while mitigating risks along the way. So we're very laser focused on helping kind of small, medium-sized businesses, privately held businesses, create the best financial outcomes possible. And we've realized that we can actually help the advisor be a proactive participant in that so that both parties win at the same time.
Fantastic. There's a lot in this industry about, in the financial wealth management space about the financial advisor being the center of influence for their clients. And, maybe the financial advisor might not be able to help with, estate planning, but having connections to help them. And it sounds like that's really what you're helping financial advisors do, is be that center of influence for the small business owners, medium business owners.
Certainly, and we view it very much as kind of like the quarterback. If you think about the ecosystem of advisors, you kind of got your privately held business in the middle, and then they rely on a variety of different advisors to perform various tasks. They all have different expertise. They're looking for some of them to be more proactive, some of them to just ultimately paper things when the time were to come. But that's a lot. That's a lot of people to manage all at once, and so it is important that somebody is the center of influence, and that center of influence needs to have aligned interests. And when you think about wealth creation benefits both business owner and their advisor. And so it's a pretty logical kind of quarterback, that position to play, where they don't need to be an expert in everything, but they need to have visibility to the ever-changing health of that business and how that impacts both how they do their job, but how their other advisors might do theirs as well.
Fantastic. I love that, the comparison to the quarterback as a sports fan. But it's interesting how that's evolved over the years. When I started in this industry, gosh, aging myself, over 20 years ago, it was just kind of a stockbroker. There were financial planners, but they didn't really have that center of influence. They were investment managers more than financial planners. That's evolved, and now we're going through these trends in the wealth management space. So let's start with the ongoing wealth transfer, that trend in that space, in the wealth management space. And in that, we talk about the wealth transfer all the time and how it's impacting the way wealth managers interact with and service their clients.
Yeah, we have seen a continued shift. I'm not fully convinced that it's all the way there to where it needs to get to. I think there's some really positive kind of leading indicators that are changing behavior. And so if you think about, business owners and advisors, they're both incredibly busy. And as far as I'm concerned, time does remain finite as far as a resource. And so how can we now do a better job of solving for time, both for business owners who are very limited by time and as well as advisors, right? You can only handle so many people. You can only handle so many relationships and so many families. And so I think that you're starting to see a change in saying, well, how can I leverage certain things? Yes, technology is part of it, designed to create capacity, but we are seeing advisors become even more efficient, and some are ruthless in prioritization, adoption of technology in a really positive way that allows them to have more time so they can really start to kind of what we call kind of building a fence around the future high net worth. And when time remains finite, you end up saying, well, I've got these families, these wealthy families, these high net worth individuals that I want to spend all of my time with. And that's great. And that's important. But there is this next wave in the transfer of wealth that you're seeing coming that is a bit of an unknown and a bit of a black box. And it does take time to figure out what's going on inside that black box. And so I think that's where I think you're continuing to see this evolution where advisors that are saying, hey, I know that I'm doing well in this very specific area, but that isn't viable for me long term because eventually those businesses and those families may turn over. So I need to figure out where that next wave is coming from. And I think some have really they've dove head first into that. Others I think are a little bit slower to adapt to that, but we're starting to see a change in behavior, which I think is really positive and really healthy.
I'm glad you brought up technology and making practices more efficient. You are exactly right. Financial planners, they have to wear multiple hats. Financial, they have to be planners, they have to be marketers, they have to, keep track of what's going on in the investment space. They have to worry about compliance. You name it. We could go on and on. And it's leveraging technology that can help you, or outsourcing. We're seeing a lot of financial advisors outsource their investment management portions of their practice because it's not as value oriented. They can create more value for their clients by meeting with their clients and spending more time with them. You talked about small and medium sized business owners and in that space. What type of trends are you seeing within the small and medium sized business client type for financial advisors?
It's been very interesting because we've been in business for a while now, and we've gathered kind of a pretty robust aggregate data set. This has really kind of informed a lot of the behaviors and thinking and financial behaviors in particular of small to medium sized business owners. And some of those, some of that data, what it's been telling us has not been overly surprising. But I think what has been, and I'll call it one kind of very specific area, and how it impacts kind of that the reach across the aisle to their wealth advisor, wherein they both kind of benefit, has been something that we've been measuring for some time. And in the InterVal platform, one of the things that we do is we're looking for opportunities both for the business owner and their advisor to mutually benefit. And one of those things we look for is actually excess working capital that is growing and sitting on balance sheets that businesses are not either reinvesting in their business or are not putting to work elsewhere with their advisor. And we've seen this number continue to grow. So we've been measuring the average excess working capital sitting on private business owner balance sheets over the last few years. And we've started to see that number creep up. And the belief is that what's happening is you're getting a lot of these businesses in the baby boomer age group that are looking at, a liquidity event one day, and it's probably getting closer and closer. And they're sitting there and saying, well, do I want to reinvest this money in my business right now if I don't think I'm going to be around in 5 or 10 years? Or what should I do with it? So as a result, they typically do nothing. And so it starts to build and build and build, as opposed to actually extracting it in a tax efficient manner and putting it to work with their advisor in a proactive way as a part of like early stage wealth creation, even before a liquidity event happens. And so we've seen a lot of that. And that's really interesting for us and telling for advisors and saying, well, maybe I've been waiting for this high net worth individual to kind of reach that status upon a liquidity event. But little did I know that they actually are high net worth today. They are liquid. It's just inside of the company as opposed to a personal asset. And so I think that's really been telling and has really kind of driven some of our adoption inside of the wealth space.
Interesting. So, how can what type of conversations should financial advisors be having when they're talking about the owners of small businesses about that cash? And, is it's obviously a lot different than having a private client and just a family and managing their cash. What are, those conversations they should have?
I think one of the first, and if you think about kind of goal setting and kind of goal oriented kind of advisory, And it's very similar, and that's been even more prevalent more recently on the private or on the individual side. But I think you kind of take the same tact with a business owner and say, before we start talking about what to do with the cash, let's talk about your business goals. Is what do you need from this? How does this interact with your overall financial plan? Is a liquidity event even necessary for you? Or have we done a good job planning elsewhere to the point where, that's a bonus? And so I think kind of first understanding, what do you need this business to be worth and why? And how ultimately does this impact your overall financial picture is the first step. Set a goal and a timeline by which you want to hit it. And I think that is very much kind of aligned with some of the wealth management conversations you already have with the individual. You're just going a step further and having it related to the business. So it's a pretty logical conversation. And then once that is kind of set, then it becomes a question of, well, what do you need to get you there? And you don't need to be an expert in how they run their business, but they might say, hey, look, I'm looking to get into this market. Okay, well, we're watching that, like, you've actually got a lot of excess working capital over and above the need to really operate in your current structure. So maybe we set a number of saying, hey, when we see this number get to $2 million in excess working capital, you have a choice. You either extract it and put it to work with me, or you should be talking internally with your management team, with your accountant. How can I put this to work to help me enter that new market so that I can grow even more and get that much closer to my ultimate end goal? And so I think that's really, when you say quarterback, it's establish the priorities and the goals and open up those kind of more meaningful conversations. The transactional conversations will just happen around that.
Very great insight there, Trevor. You mentioned about, go a little bit deeper in the generational shift that we're taking place, and that impact on the small to medium business owners and those businesses. Can you go a little bit deeper there on what is the impact that generational shift has on SMBs?
It's pretty dramatic. And, even just simply from kind of a numbers perspective, we've had seen birth rates decline, baby boomers looking to leave. But even if we want to overly simplify this and think about supply and demand, and if you think about a bunch of businesses leaving the market at the same time, and the demand for them maybe not being as high as the supply, well, then what? Well, what it does is it raises the bar for what is supremely attractive and monetizable when you do look to exit your business. And so I think that's one of the it's kind of the ugly underbelly of the generational shift, is that the best will be rewarded, but the bar for the best will be raised. And so I think the downside of that is, if we treat it like it's residential real estate, like you just one day say, hey, I want to downsize, that it's not as simple as, well, there's always going to be buyers for my home. And so it's a question of starting that conversation early so that you understand when that timing window occurs, of when you've met your financial goals, when the timing is right to be actually action that in a really thoughtful, intentional, and proactive way, will increase the likelihood of you getting out at a time where there will be more supply than there will be demand.
Interesting. So our audience, wealth managers, probably want to know, well, how do we capitalize on these opportunities or on these trends that you've talked about, the generational trends and the impact they've had on the small and medium businesses? You know, are there opportunities for wealth managers, and how can they capitalize on those opportunities?
I think there's a massive, massive opportunity, but I think it starts with building a fence around the customer now,
Right.
and don't let kind of personal liquidity today be the only indicator of future liquidity. Because one, we can actually have the data to prove that business owners do have a lot of excess liquidity. So they actually are liquid today. They just haven't properly structured it in a way where they can get it out and put it to work with you. So I would argue that there are high net worth individuals right now that are unknown to many wealth advisors. And then secondly, company liquidity is also, a great predictor of future state liquidity. So that wave of future high net worth is worth trillions of dollars in the market, where this is all money that will hit market one day soon, when these business owners are proactively planning for and then maximizing upon kind of that end state. And so I do think very much it starts with building a fence around them today, because the last thing an advisor wants to do is to compete for the liquidity once it hits market, when it's been your customer for the last 5 years. You want to make sure that when that liquidity event is coming, because you're a participant in it. You're placing products, and all along the way, albeit slightly smaller ones, all as an investment to be first in line when that liquidity event does occur.
I love, you've mentioned it a couple of times during this conversation, Trevor, about building that fence around the client. how are some ways that a financial advisor can build a fence? I love that analogy about building the fence, but how can they do it? What are some ways that they can build that fence?
Well, one of the ways that we've seen it, and a lot of our customers, the way that they're deploying us is actually making us a part of the financial planning process. And so, whether it be a net new customer or a customer that they've already done a plan with, they actually inject us into that process and say, well, let's revisit your overall plan because this platform is going to give us visibility to one, your existing, value today, your underlying business health, and your likelihood of achieving even more value in the future. And then we monitor that and then constantly inform and update the financial plan. And so you think about really that's what financial planning is it's also another version of building a fence, right? It's always been the first foray into how you build a fence around your customer. Is the fence is both today, but then it's about planning for the future. And then you want to participate in as many activities, products, and services along the way while that fence continues to get built. So we're simply a part of that. But ultimately, financial planning is the first kind of stake in the ground, pun intended, as we build that fence around the customer.
It's interesting you said, like, going back to when I started in this industry, financial planning, some advisors did it, some didn't. It was more about stockbrokers and stuff like that. But it made it a lot easier for clients to move their money and go from one broker to another, with transfers, making it very easy. When you incorporate a financial plan, do you see that it's a stickier relationship and it's harder for the client to leave when you have a comprehensive financial plan in place?
Certainly, especially if it continues to evolve, right? As I think that financial plans are, it's like driving a car off the lot, right? It immediately depreciates the older it gets. And so if you think about it as, building a plan based on all the knowns today, and then you talk about stock picking, stockbrokers, and all the things, those are the things that occur. Those are the transactions that occur as value additions, and they're accretive to ultimately building value for that customer. So those are the actions, the transactions that occur to really make the grass that's in between that fence that you've built really kind of
Mhm.
thrive and grow. Right. And so if you think about that and how every time an action occurs, how does this influence the overall validity of the plan? Do we have to reforecast? Like ultimately, is there a different kind of allocation depending on all of the factors that have been changing? So financial planning is great, but it's only made better by the fact that it needs to be constantly revisited based on up-to-date data across all of the different factors that go into a plan.
Interesting. And continuing the conversation about financial planning, I feel as it's grown in importance, like you've talked about, as investors have placed a greater importance on goals based investing. It's not so much about, just beating the benchmark in investments, it's about achieving set goals. What challenges do financial advisors face when drafting a financial plan for small business owners?
Well, admittedly, and this is going to sound self-serving, is I think one of the first things that they typically miss on is, they look at it more from the personal standpoint of either existing liquidity, or they say, hey, we're kind of developing this holistic financial plan. Oh, by the way, what do you think your business is worth? And they take their word for it. They write it in pen, and even if they do, even if they're correct, it's like a broken clock. It's just never right a second time. It's just right in the moment. Right. And so, how now can we really build a cohesive and holistic plan when one, the number might have been wrong to begin with, and two, we're never revisiting it? And so, I think that's probably one of the biggest missteps when it comes to business owners, where I think a lot of advisors feel more comfortable in the personal planning side. And what we want to do is ultimately, how can we reconnect these? Because at the end of the day, business owners are people. And so, what they're operating will influence their personal plan. We just have to do a better job of, connecting that ecosystem.
Great. You made a very good point where it's a lot easier to come up with somebody's net worth and the valuations of their securities and cash and a car potentially in a house compared to a small business. So InterVal plays a big role there in evaluating those small businesses. What other roles does InterVal play in addressing the current trends in the wealth management space that we discussed, and how can it help enhance the client experience?
I think client experience is probably the most important part of that sentence, right? Is, how do you differentiate yourself and ultimately align interests, and, not be viewed as a transaction or, a stock picker or things like that, right? And I realize you kind of used the term when you were looking backwards, and that's not the case anymore. But I think it is about how can you differentiate yourself and add value, so that something isn't truly commoditized. And I think that's a big part of it. And part of what InterVal does for our firms that we work with is aligning those interests. We want to empower business owners to make healthier business decisions. I can actually prove that business owners that monitor their underlying business health, inclusive of valuation, but more so the leading indicators of future health, they grow 29% year over year in terms of enterprise value. It's because typically when you get feedback, you tend to make healthier business decisions. When you make
Mhm.
healthier business decisions, your wallet begins to swell. When your wallet begins to swell, there's more for your advisors to do to help you. And so, kind of connecting those things with a business owner focus first only impacts the greater need for wealth management and wealth advisory services. And so, I think empowering both parties with visibility to those types of metrics and actions that need to be taken in the moment, that's really what we're intending to do, because I think technology can bridge that gap, create an efficiency and an automation so that both parties are making better decisions and AUM grows with it.
Fantastic. It is really all about technology, especially with AI becoming so much more accessible and people are starting to understand and harness the power of it. Technology is probably the biggest player in this, the trends and evolution of this space.
It certainly is. Obviously, I'm a little biased, but it certainly is. And I think it needs to be truly understood though too, right? It can be a little bit dangerous when we kind of use terms, the broad terms that AI solves everything. Well, AI does some amazing things and can certainly make you more efficient. It certainly has done that with us and our platform as well. But at the end of the day, technology has to do something. It actually has to solve a business problem. It can't just be pretty. And it can't just be something that people look at and say, well, this looks really neat. At the end of the day, you're just created a commodity. It actually has to solve a problem. It actually has to make you more automated, make you more efficient, to allow the humans to do the work that only the humans can do. And I think if we view it as an augmenter as opposed to a replacement, I think we'll be far better off.
I think that's a fantastic way right there, Trevor, to end this conversation. And y'all, what at the Wealth Management Edge event where I met you and your team at, we talked a lot about AI. It was interesting. Somebody brought up is like AI is great unless it gets into the hands of the wrong people. And then it can, like, hackers now hacking and deep fakes are going to get just that much better with AI. So like you said, AI is fantastic, but you also have to be careful with who's controlling it and who has it.
Absolutely.
I'd like to end with a fun story. So you mentioned you're up in Canada, Trevor. Anything fun and exciting going on in Canada? It can be business related, something interesting you've heard, read, seen, not business related. What's going on up there?
I don't know if it's necessarily Canada specific. I do enjoy informing people that our weather patterns are like the South in the U.S. right now. Everyone assumes that we're dealing with snow all the time. That's definitely not the case. And in terms of a funny story, we talked about AI a moment ago. And one of the things that we enjoy doing, we like to have a little bit of fun here at Interval as well. And anytime something funny or memorable is said, we actually have it put up on our wall in the office. And we're not talking like definitely like they're not inspirational quotes. They're literally things that people said that people thought were funny and memorable. And we came up with kind of a term for our underlying algorithm, and it's called our intervalgorithm, because of course it would be like the words right there. And so more recently, as we've kind of explored more in the AI space, we've been trying to figure out a great name for our AI, and Ryan, I'd love your help, because right now we're trying to decide between InterValerie would be the name of our AI, or InterVal Kilmer. And right now, I personally, as a Top Gun fan, my vote is for the latter, but we are turning to democracy for that.
I am a big fan of Top Guns. Actually, not to go off the rails here, but the Maverick version, Top Gun Maverick, was the scene of it was filmed here in Lake Tahoe, through the mountains and all that stuff, and at the Tahoe airport. So I kind of like the Val Kilmer reference there. That would be my vote. There you go, Trevor. But
I'll make sure to add it to the tally.
yes, I don't know if you should really make your decision based on what I think, though. I'm not sure that's a great business strategy, Trevor.
Appreciate it.
But yes, weather in it's crazy how whenever I talk about Lake Tahoe weather, they're like, gosh, it just must snow, all the snow. And it's like, it's 90 degrees today and it's really hot. Like they don't realize how beautiful it is during the summer, and that's fine. People are wearing packing winter coats and all that stuff, thinking they're going to get 20 feet of snow in August and July when it's 80 degrees, but that's fine.
What they don't know keeps them away. So
yes, exactly. Trevor, thank you so much for coming on the show. It was such a really fun conversation. Thank you for sharing such great insight about the industry, about the trends, and how InterVal can help. Where can our listeners learn more about InterVal?
Our main website, probably www.inter-val.ai, would be the best place to kind of go and get started, learn more about our verticals, and how ultimately we add value to business owners and the advisors that serve them.
Fantastic. Thank you, everyone, for listening to this episode of Zephyr's Adjusted for Risk podcast. You can watch all of our other podcasts on the Zephyr YouTube channel, as well as on Spotify and iHeartRadio. Thank you, Trevor, and thank you all for listening, and have a great rest of your week. Trevor.